Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's fundamental and technical supply and demand Forex and gold analysis. If you're new, a warm welcome to you, and if you're returning, an equally warm welcome to you. And if you like the videos that I provide every weekend, please don't forget to like, subscribe and share with your fellow trading colleagues. Definitely helps support the channel, a free way to support the channel. And so getting into the week ahead, you can find this analysis on tradingeconomics.com. If you click on there, go to their main site, tradingeconomics.com, and then go to the week ahead tab, you'll see their analysis on what is coming up next week. And so let me just zoom in a little bit. In the week ahead, in the US, the spotlight will be taken by ISM non-manufacturing PMI, the University of Michigan's consumer sentiment, and PPI data. So that's more driven by an I guess an early indication of the economy as well as inflation data. So investors will also follow interest rate decisions in Australia. Yeah, so a lot of central banks coming out with their decisions. So Australia, Canada, and inflation rates from China, Brazil, Turkey, Russia, Philippines. And then finally, we've got German factory orders and trade data from China, Canada, and the US should provide some insights, I guess, into the state of global demand. And this month, not necessarily this week, but this month, we've got a lot of central bank announcements. Not, this week is going to be Australia and Canada, but we've got pretty much, the Bank of England, I think the ECB, the Federal Reserve, and then coming up this month as well. So it's going to be a busy month in the next definitely 2 weeks, up until maybe just before Christmas, and then things will probably quieten. Also, probably they will quieten down for the Christmas period, and then back to the new year. Anyways, Trading Economics have a really detailed description as to what to look for. So click on the week ahead tab, and you can have a read of all of that and what is to be expected. So I'm going to get into the charts and just some of my bias and my analysis going forward. And if you haven't watched it already, I released a video this week, or two videos this week, called the Forex Price Action Crystal Ball versus Forex Fundamental Analysis Part 1, and there is a Part 2 that I've released. And in this analysis, I pretty much spell out and go over, and this was from a private members Discord group call that I hold on Wednesdays, and this was on the 19th of October. And also as well, I had basically said this months in advance as well. There are about 2 or 3 other private members calls which basically was talking about this exact analysis and this coming. And so if you watch this, and part 1 and part 2, what you'll be able to gather from that was that this move to the downside was expected and it was coming. So think about, Wednesday the 19th, right, which was this day right here, 19th of October 2022 is when I had the call. And again, I've been saying this probably from August, September times, but this is just one of the ones that I released, and you'll see that there was a reason why prices have, pulled back. Now, let's not confuse this with a reversal, and many traders would confuse this with a reversal in, a dollar trend, right? This is not a dollar trend. And the reason why I've zoomed out is because if you look at the year to date, meaning the 2022 lows to the 2022 highs, so this was an absolute bargain price for the dollar, and this has been obviously an expensive price for the dollar. Between a bargain or a cheap price and expensive price is what's known as fair value, and price typically reverts back to the mean, right? Reversion to the mean, which basically the mean being an average, and an average being in terms of the narrative of expensive and bargain prices, and looking at value. This is fair value. So it's not really a surprise as to why the dollar has kind of pulled back, especially after this this major trend. And it's really been driven by and I'm not going to give away, the whole video or anything like that, but it's been driven by a shift, I guess, or the potential shift in, monetary policy. And many traders would say fundamentals don't work. Well, they do, right? Just not in the way that, is taught online. But, pretty much forecasted this to happen. And although every week I literally continue to say that I'm still long, is because I want to be a bargain hunter. I'm not really trading just to trade and go short and try and go long on the currency, unless there is a sustained, or I believe there's going to be a sustained trend. And I just think this is a pullback to, cheaper areas and bargain prices. And what we've seen as well is the potential for a floor or the dollar to have a fortune in reversals because of what happened yesterday. Well, I say yesterday, but on Friday, with regards to the data and jobs data, right? So non-farms, US hiring and wages extend strong gains, keeping pressure on the Fed. Payrolls rose 263,000 in November, above all but one estimate, and the average hourly earnings, which is inflation related, jumped to 0.6, the most in nearly a year. And so that keeps pressure on the Fed. And so the US employment added more jobs than forecasted, which is good. I say good, but whether it's good or bad, but in terms of it putting pressure on the Fed to try to continue to appreciate the currency and continue with their monetary policy. And if you're long dollars, then that would be a good thing, right? So anyways, forecast on wages surged by the most in nearly a year, pointing to enduring inflation pressures that boost chances of higher interest rates from the Federal Reserve. And so that's the analysis. Also as well, Larry Summers says Fed will need to boost rates more than markets expect. So former Treasury chief warns of a high interest rate recession, and Summers says economy could slide suddenly like avalanche. And that doesn't sound great, but he says that we have a long way to get inflation down to the Fed's target. Summers told Bloomberg Television Wall Street Week with David Weston. I actually watched that as well. As for Fed policymakers, I suspect they're going to need more increases in interest rates than the market is now judging, or that they're now saying. And obviously Larry Summers is ex-Treasury chief. He's a very smart man, very experienced. And so not to say that he can't be wrong, but when certain people talk, you have to kind of you have to listen, right? And so putting that all into context and understanding a pullback does not make a change in the trend. When we're back down to fair value, I think again the dollar being a potential buy technically at these areas. Of course, nobody knows. 105 was seen as a bit of a potential for a target, and I did say that there's a possibility for it to come down to the 104s, of course, and even the 103s, right? And that would be decent. And I think that now that the dollar has inflation pressures haven't necessarily subsided, as well as the economy still being able to support rate hikes in terms of jobs and employment, I do think that, I'm not saying that the dollar is going to reverse thousands of pips, nobody knows that, right? But in terms of understanding value in comparison, right, to other currencies, I think the dollar is again one of the better off currencies. And price and value are two different things, right? Price can doesn't always reflect value, and so the lower this goes, I think the more it becomes obviously a bargain. Anything below fair value starts to become cheaper, and so the market is always looking for bargains and draws traders into going the other way. This was known as also as well the pain trade, right? Pain trade, and this is driven by things like short squeezes, end of month flows, which we cover in our private members group, and so but for me, my bias is still always long dollars, even in the face of a pullback, because ultimately, I'm looking to buy for cheap. So for me, dollar index, this is just coincides with any kind of dollar buying on other currencies, and I do think zooming in, we should want to see at least a bit of a a bit of a pullback to the upside, as long as again the data supports the narrative. The data always has to support narrative, and at the moment there is positive sentiment. Especially, I think this might have fallen a bit more had inflation had gone to the downside, and jobs had been weaker, but obviously it hasn't. So I think over the medium term, I would say, for now at least, we should, in a word, possibly and could, it's not definite, right? Because no one can predict the future, but the probabilities would say that the dollar should be a buy at some point. And again, this isn't financial advice either. One of the things that is going to stand in the way of the potential for a dollar reversal as well is China's economists calling for easing of COVID curbs to boost growth. And so if there is a reopening of the Chinese economy, that would trigger more risk on sentiment, and then the dollar in fact won't necessarily benefit, or won't benefit in at least the short to medium term, because money would then tend to come out of the dollar and into currencies, commodity currencies, like for example the Australian dollar, the New Zealand dollar, because China is really the world's economic engine, and there are growth opportunities that money will flow into and out of. And so I think the money, there will be portfolios being readjusted out of the dollar as well, and into other growth currencies and commodity currencies. And so that is another thing that could keep the dollar on the defensive. If that, if you see the dollar start coming down, and that story is gaining traction, then that can also push the dollar to the downside. But my bias personally is still to the upside. And so yeah, I think the dollar is a buy. Again, you can also sell if you want to sell. If you're looking for any kind of short trades, and you're looking for you don't necessarily agree with me, that's fine. You don't have to agree. And if you want to look for sell confluences, then you're looking for the 106 price to come up to the 106 area at the moment, and then looking for short trades, again not necessarily on the dollar index, but you would look for it on confluence with, for example, the dollar yen, dollar Swiss, dollar CAD, etc. Looking at the dollar yen, and the dollar yen has pulled back again, going back out to the year to date. If we look at the year to date price action, and we see this massive trend, right, which was all predictable, predicted, and in fact that just reminds me of the fact that you guys did not complete the target, right? Anyone watching, I had a 10% likes target on my videos, and if I get 10% like, 1 out of 10 of you like my video, my weekly videos, and over 1,000 views, then I would release a webinar that I recorded on the 3rd of November, forecasting Forex trends that lasted for months. And the guys in the group, in fact, and I have all the evidence of this, were aware of my forecast for the dollar yen making this type of move to the upside. And so I can show you how to do it, and I recorded a webinar showing you guys what you need to know, but I just needed you guys to comply, and 1 in 10 of you just basically liked the video, just press like, but unfortunately we fell short of the target, so I can't release the video until I do, and until I do, then until you guys 1 in 10 of you like my YouTube video, weekly video, then unfortunately I'm not going to be releasing this until maybe next year. And even then I might not even release it. It might just be for those who actually turned up for the webinar, who got the information and benefited from it. So all you got to do is just make sure that I get over 1,000 views and 1 in 10 of you like this video and my weekly analysis videos. And once I get that, within 7 days, then I will release the webinar. Believe me, it's a webinar that really kind of cuts out a lot of the nonsense. It's what you really need to know in terms of fundamentals analysis and forecasting trends that last for months. Anyways, getting back to the dollar yen, again just looking at the yearly lows, yearly highs, we're really just pulling back to, again, fair value. Fair value does not mean that we are, the trend has ended. It might be a short-term pullback, and I get the size of the move to the downside, looks like lower highs and lower lows, it's making a new trend. But zoom out, always zoom out when you see the fact that it's not, it's just pulling back to a decent demand zone. Then it puts things into perspective. So I think we are at the lows, or somewhere near these lows, where you want to probably now look to potentially start to buy the dollar over the yen. The Bank of Japan are the only bank that are not hiking rates still. So ultimately, I think the dollar is still a buy over the yen. You do have some supply right here in case you do want to look for pullbacks, to look for sell trades. So those two zones would be the immediate zones that you would look towards. If you do get a pullback and you want to be a buyer of the yen, then you're looking at the 13863 levels. But for me, my bias would be to the upside, especially after the good news in terms of I say good news, but the positive news out of the fact that we've got US inflation, still a potential problem, wage growth, as well as jobs supporting the economy. So anything down into the 13350s down to the 13330s, I think is a decent buying opportunity. Dollar Swiss, again zooming out year to date, low to the high. Actually, this is the dollar hasn't really benefited at all against the Swiss franc this year, and we are again at a cheap, quite a bargain area. So I think, have we broken through that demand zone yet? Well, I'll keep it there for now because it's still a tradable opportunity. So from a demand perspective, you do have a demand zone here, and you've got another one there, and then you've got these ones all the way down here. So these are the zones that daily zones that you're looking for anyway. If you're looking for a buy trade, if you're looking for sell trades, then I would probably say you're looking at all of this as your first zone that you'd look for potential supply. The next supply zone up from that is here, which is hidden supply, and you're looking at those zones here on the for the dollar Swiss. And so again, a nice reversal in fortunes for the dollar price. Should potentially move this higher at some point. Again, it could go lower before it goes higher, who knows. But I think the dollar buys, I think again we've seen maybe the temporary flaw in the dollar weakness and devaluation. Dollar CAD year to date, as we're going to the end of the year lows to the highs. And looking at the tool again, Canadian dollar has been a bit weak this against the dollar. If we're looking at buy trades, then you're looking ultimately at demand around here. Supply, your nearest supply zone, I'm gonna put it up here because I do think that although we've pulled back a little bit into here, I don't think it's enough for me to want to draw that as a zone. So I think if anything, if you want to be a buyer of the dollar against the Canadian dollar, I think that's decent. And if you want to be a buyer against the buyer of the Canadian dollar against the dollar, I think the highs are going to be the 139 is going to be really the best opportunity to look for buy trades on the Canadian dollar. New Zealand dollar, US dollar has just been going from strength to strength, and we're coming up to quite a decent area of supply here if you want to be a buyer of the US dollar, of course. Not quite there yet, but I think that opportunity technically is actually really nice. And the New Zealand dollar and the RBNZ, their central bank, haven't have kind of bucked the trend in terms of hiking more than expected. They hiked by 75 basis points rather than their expected 50 basis points, which is keeping New Zealand dollar actually quite one of the factors keeping the New Zealand dollar quite strong. Also as well, there has been the potential for China reopening, which would benefit the New Zealand dollar, and so any pullbacks into any kind of demand zone, if you're looking to trade that against the US dollar, would be a buy. If you're looking at potential risk off continuing and really kind of a ceiling to the New Zealand dollar's appreciation, then I think this supply zone is going to be really nice for a decent sell. And we've had this this kind of move which has kind of gone straight up with no real major pullbacks, and so ultimately you will get a pullback at some point, in the same way that you had a nice move all the way down with no pullback. This was the pullback, and then you've got the same thing going on this side of things. So I think prices should pull back at least to, again, a decent area, possibly around the 60s to 5.9s, yeah, somewhere around maybe here. But again, not really a pair that I'm interested in trading at the moment. Pound dollar, right? End up getting stopped out of this trade, but I've actually re-entered back in on this, and so the pound is baffling everybody, really, when you think about it from an investment perspective. And as bad as the dollar might seem, I can't see it being worse than the dollar, and I think this is just one of those short squeezes that have lasted for a while, because when you look at, for example, Britain, is near the bottom of the heap for economic growth potential. Former Bank of England official says dip explains high UK tax burden, labour shortages behind steep collapse of growth speed limit. And so, Britain's growth potential has fallen behind every large economy except Mexico due to collapsing productivity and severe labour market shortages, according to former Bank of England rate setter Michael Saunders. So, this is like, it's like you look at the pound, and you look at the performance of the pound. You would think that the pound would be a buy, right, in terms of value, but I think this is highly overvalued or expensive for the pound. Just like I said, from a fundamental perspective, yes, things keep going higher, but for me, the downside potential for the pound, there's still targets of the pound reaching at least 110, and even like as far as the 114s. So even if it comes down to the 114s, and this is where the demand zone would be, you still have at least about a 900 pip move to the downside. So I don't mind losing a couple of trades here and there if it means that my risk reward potential to the downside, if it reaches there, is going to be at least 10, 11, 12 to 1. So I'm back in on this. Let's see, if it can finally roll over towards the end of the month, now that we've got some decent news on the on the dollar. Let's see if that rolls over. For me, I can't really see, myself buying the pound. Fundamentally, it's really just not a. Like I said, you've just seen, the fact that what they're projecting for the pound, and I think it is one of the worst currencies. Again, the move has been a bit more of a surprise in terms of it not rolling over just yet. But what that does is that just creates more liquidity to the upside. Allows the institutions to buy for cheaper, and then because they actually plan their trades out for months in advance, allows them to get in for cheaper, and then I think it's going to roll over at some point. So yeah, that's really the pound. Euro dollar, I'm in this trade as well, looking for more downside. We are coming up into this area here in this supply zone. I'm actually in from I think it was a weekly zone that I ended up getting in on, and so let's see what happens if it rolls over again around here. For now, for this daily analysis, you're looking at just slightly higher, and then to the downside, I think that would be decent for a potential short trade. Again, I think the 105s, 50s, 106s is very, very, very cheap. Again, this could be there could be a reversal in fortunes fundamentally for the euro, and that would drive the euro higher. But at the moment, it's difficult to see. If you are looking to be a buyer of the euro, then you've got these areas right here for demand. First demand zones 1 and 2. But again, my bias is for dollar downside. Again, there's lots of bank analysis, calling for at least prices to come down to around here by the end of the year and into 2023. So there's still a good, at least about 500 pips in order to get on this trade. Euro fundamentals talks about ECB Guindos sees inflation at current levels for 3 or 4 months. So European Central Bank Vice President Luis de Guindos expects euro area inflation to stay at current levels for a few more months. So inflation may be 3-4 months at these levels, but we will have a clear slowdown in the first quarter of 2023. He said in Madrid on Friday, we see that inflation is beginning to slow down, but it has to be stable, continuous over time. We have an M-shaped evolution. And so, inflation around the world hopefully is coming down. So, when we always kind of focus on the US dollar and the Fed, but the impact of inflation coming down and what that has on the dollar, but the same thing is going to happen to the Europe as well as the UK and other central banks across the world, because as they say, a rising tide lifts all boats, right? And if that happens, then obviously if the tide goes out, then it's going to lower all boats. And so the dollar isn't exclusive to the effects, and the dollar valuation isn't exclusive to the effects of what the central bank does. So if inflation coming down is affecting the dollar and devaluing the dollar, then it's going to happen. The same thing is going to happen to Europe, and the same thing is going to happen to every other central bank. So for me, if that does start to come down and they surprise, because the expectation as well is 75 basis points. Oh, sorry, I don't know why I did that. 75 basis points was the expectation for the hike. But if they don't hike by 75 basis points and they hike by 50, then basis points, then the market has to revalue the euro at 50 basis points, and that will bring the euro to the downside, right? Or it should do anyway. And so let's see what happens there. Aussie dollar, again benefiting from bit of dollar weakness, but again, if we look at the overall year to date from low or from high to low, and you'll see that we haven't even really pulled back to fair value yet. So although yes, we're seeing a bit of a pullback, there's still some areas that needs to be taken out in order for this to kind of be determined from a trending perspective, right? Or reversal in trends. And so for me, I think you've got a supply zone there. Not really a pair that I'm interested in trading, to be fair. Only to the long side once risk on starts to come. And if risk on starts to come, then I think it's going to be probably the Australian dollar is going to be one of my immediate buys from a demand, from a currency and a risk on perspective, not necessarily against the US dollar, but I will look for any pullbacks on Australian pairs and look for buy opportunities. So that's pretty much where you are if you're looking to buy the Australian dollar. If you're looking to sell the Australian dollar and buy the US dollar, then we actually come up into a decent zone to look for any kind of short trades. Aussie yen, again, the market giving mixed messages in terms of risk sentiment, because if risk was on, then you should typically have the Australian dollar going higher if risk was on. So the fact that the yen is still making lows, I'm not saying it is risk off, but it's definitely not risk on. So we've got some demand around here. In fact, the whole area, I think I'll basically put this demand zone in. Wide area of demand. I do think that the Australian dollar is a buy as long as if China starts to reopen. So I think anything around the 90 areas is going to be a really nice area for and a bargain price for the Australian dollar. Again, looking at the year to date lows and highs, bargain for the Australian dollar, expensive for the Australian dollar. Fair value comes in at just below those 90 areas, and so that's what I'm looking at, where I'm looking to buy the Australian dollar. And again, hopefully if risk on comes in, or the Bank of Japan do not change their monetary policy, because if they start to change their monetary policy, then I think maybe all bets are off. And the yen, I think, is a buy. There is quite a wide zone of supply right here in terms of the daily, but I think that always the top end of that supply zone should be the one, and then you've got another zone, smaller zone here, and then you've got a bigger zone right there. And so that's where, in fact, I've just seen that it's going to be hidden supply. So in fact, it all encompasses that whole area there. But I think the better area to look for any kind of pullbacks, I think if you're looking to buy the yen, is going to be at the 96 area. That is going to be where the fresher area of supply is before looking at getting short. And finally, gold benefiting from a weak dollar. And I'm actually not trading gold, but for anyone who's been watching my weekly analysis, been saying that gold is a buy as price has been coming down here from an investment perspective, and now we're seeing prices go to the upside. I think there's probably maybe going to be one more push to the downside potentially over the next coming month or two, as the dollar potentially starts to strengthen, or if it does strengthen, then this is what you're going to see. And you could see a bit of a pullback, and this is backed up by analysis from HSBC. And so they said gold likely upside in 2023 amid dollar weakness, and our expectation for likely dollar weakness in 2023 should be positive for gold, while Fed tightening could still restrain gold at least into the first quarter of 2023. An eventual end to its rate hike cycle should aid gold, and it's really important because what you got to know is that the dollar will be a sell at some point, right, as it starts to come down in 2023. But it's talking about the fact that in 2023 the first quarter will still be supportive of the dollar, but as they start to come down on their rate hiking cycle, then gold should be a buy. So probably as we head into the end of 2023 and the dollar starts to strengthen, and then we get to the first quarter of March, February, March would be where the first quarter would start to end and the second quarter begins, we could see then the dollar start to weaken and devalue as we get to the end of the cycle, and then that would benefit gold, is basically what they're saying. So over the next few months, can you expect the dollar to go higher? Of course it can go higher, but if the dollar's strengthening, if you think the dollar's going to strengthen from now, then the correlation between gold and the dollar continues in terms of dollar strength and gold devaluation, then you have to expect another push down, another buying opportunity as prices go down for the final buy of maybe 2022 and 2023. And as we start to look at recessions or the avoidance of recession, right, because that's going to come as the world goes into a potential recession, or certain countries at least, like the UK and Europe for sure, then looking at gold is going to be a nice hedge against all of that uncertainty. And so I think there might be one more push down for gold as the dollar strengthens for the next maybe month or two or three, and then as the dollar hiking cycle ends, gold definitely being one more buy. And so that's the analysis, backed up. Whenever I do analysis, it's always backed up by experts, and and bank analysis. And so for confluence, of course, we're not always going to be right, and I know we're never always going to get the timing right, but one thing we do more often than not is understand where the trends are, and you know, forecasting those trends. And if we get one of the trends right, which we often do, then we can ride it up for, you know, a decent profit. Anyways, guys, take care. Don't forget to like this video. If we do, then we can get, you know, 10% of you like this video after at least I record the next video next week. Then I can release this webinar, which is really going to help you guys. But until that happens, it's going to be kept in the vault. So I hope you all have a great week. Take care, guys, and I'll speak to you in the next video.
But if I lay down and I play dead